Money is something we all need, but for many people, it always feels like it slips right through their fingers. They work harder, maybe even earn more, but somehow, they still end up struggling. Why? Because financial success isn't only about how much you make, it's about the choices you make with the money you already have. In this video, we're going to cover the 5 mistakes that silently keep people poor. These mistakes are so common that you might even recognize a few in your own life. But the good news is, once you identify them, you can fix them, and finally start building lasting wealth. Mistake number 1 is living beyond your means. This happens when people spend more than they earn, often using credit cards or loans to maintain a lifestyle that looks good on the outside but is actually a financial trap. You've probably seen it. Someone buys the latest phone, drives a luxury car, or wears designer clothes, but behind the scenes, they're drowning in debt. The problem is that debt grows quietly. Those interest payments add up, and soon you're not just paying for what you bought, you're paying double or triple over time. Instead of saving for the future, you're stuck working just to pay off the past. The solution is simple but powerful: live slightly below your means. That doesn't mean you can't enjoy life, but it does mean prioritizing needs over wants. Imagine if you saved just 10% of your income consistently. Over the years, that small habit can completely change your financial future. Remember, wealth is built not by how much you show off, but by how much you keep and grow. Mistake number 2 is ignoring budgeting. Think of a budget as a roadmap for your money. Without it, you're like a driver speeding down the highway with no GPS. You might feel like you're moving fast, but you're probably going in circles. Most people don't track their expenses. They get paid, spend freely, and by the end of the month, they wonder where all their money went. The truth is, every dollar you earn should have a purpose. When you fail to assign a job to your money, it disappears. A budget doesn't have to be complicated. Start by writing down what comes in and what goes out. Break it into categories: essentials like rent, food, and bills, savings and investments, and then lifestyle spending. Once you do this, you'll quickly see where money is being wasted, like subscriptions you forgot about, or eating out too often. The goal isn't to restrict yourself. A budget actually gives you freedom. It ensures you can enjoy today while still preparing for tomorrow. And when unexpected expenses come up, you'll have a cushion instead of panic. If you don't control your money will control you. Mistake number 3 is relying on only one income. For decades, people believed that having a stable job was the safest financial plan. But times have changed, companies restructure, layoffs happen, and industries shift overnight. If your entire livelihood depends on a single paycheck, you're one unexpected event away from financial disaster. The wealthy understand this, which is why they build multiple streams of income. Maybe they work a full-time job, but they also invest in real estate, build online businesses, or earn from stocks and dividends. Even a small side hustle, like freelancing or selling a product online, creates an extra layer of security. Think about it this way: if you lost your main income tomorrow, how long could you survive with savings alone? For most people, the answer is not long. But with multiple income streams, one job loss doesn't destroy your stability. Instead, it's just a setback you can recover from. The bottom line: don't put all your eggs in one basket. Create options for yourself. The more streams you build, the more financial freedom you gain. Mistake number 4 is avoiding investments. And let me tell you, this mistake silently keeps more people poor than almost anything else. A lot of people are afraid of investing. They say things like, "It's too risky. I don't know enough about it. What if I lose money?" So instead, they play it safe and keep their money sitting in a savings account. But here's the problem: money in the bank isn't safe, it's shrinking. Every year, inflation eats away at the value of your money. That cup of coffee that costs you $3 today might cost $4 or $5 a few years from now. Rent goes up, groceries go up, gas goes up. So if your money just sits there, it's quietly becoming weaker while your expenses grow stronger. The truth is, not investing is actually the bigger risk. Think about it this way: if inflation averages 3 to 5% per year, and your bank account pays you less than 0.1% interest, you're guaranteed to lose money in terms of purchasing power. It's like filling a bucket with water while there's a hole at the bottom. You might not notice it day to day, but over time, the bucket will be empty. So how do you fight this? You make your money work for you. And one of the best, most proven ways to do that is through the stock market. Now, let's clear up a myth. Many people hear stock market and imagine chaos, day trading, or people losing fortunes overnight. Yes, short-term trading can be risky, but long-term investing in the stock market has historically been one of the most powerful wealth-building tools in the world. In fact, over the past 100 years, the stock market, measured by the S&P 500, has averaged around 8 to 10% annual returns after inflation. Compare that to the 0.1% you might earn in a savings account. Over decades, that difference is massive. Let's put this into perspective with an example. If you put just $200 a month into an index fund that tracks the stock market, and it grows at an average of 8% a year, in 20 years you'd have about $110,000. In 30 years, you'd have over $270,000. And in 40 years, nearly $700,000. That's from only $200 a month, less than what many people spend eating out. That's the power of compound interest. Your money earns money, and then that money earns money, and it snowballs over time. Here's another way to think about it. Investing is like planting a tree. The earlier you plant, the bigger it grows. If you start in your 20s or 30s, by the time you retire, that tree has grown into a forest. But if you wait until, someday, you're planting a seed in soil that doesn't have enough time to grow. That's why starting early, even with small amounts, is more important than waiting until you feel ready. Of course, investing should be smart, not reckless. You don't need to gamble on the latest hot stock or try to time the market. In fact, studies show that the vast majority of professional investors who try to time the market actually underperform. A smarter approach for most people is to invest in broad, diversified index funds, things like ETFs that track the S&P 500 or global markets. These funds spread your money across hundreds of companies, lowering your risk while still giving you exposure to growth. And here's the beautiful part: you don't need to be an expert. You don't need to check the market every day. All you really need is consistency. Set up an automatic contribution every month, and let compounding do the heavy lifting. Over years, your portfolio will reflect the growth of the global economy itself. So remember this. When you avoid investing, you're not just avoiding risk, you're avoiding opportunity. Every dollar that sits idle in your savings account is a dollar that could have been growing and multiplying for your future. You work hard for your money. Investing is how you make sure your money works hard for you, even while you sleep. Don't let fear hold you back. Learn the basics, start small, diversify, and stay consistent. The earlier you start, the more time your investments have to grow. And that's the difference between staying stuck financially and building lasting wealth. Mistake number 5 is surrounding yourself with negative influences. The people around you shape your mindset more than you realize. If your circle spends recklessly, avoids responsibility, or complains about money all the time, you'll likely adopt the same habits. On the other hand, if you surround yourself with people who are ambitious, disciplined, and financially smart, their energy pushes you higher. Conversations shift from gossip to ideas, from wasting money to building wealth. Take a hard look at your circle. Are the people you spend time with helping you grow, or holding you back? Success leaves clues, and often, the easiest way to level up is to spend time with people already where you want to be. Remember this. Your income is often the average of the 5 people you spend the most time with. Choose wisely.